Hi traders and welcome to today's video. My name is Marco Meyer from Trading Educators, and today's gonna be the first episode of the new question and answers series. So what's this new series all about? And the idea is very simple. You send in any questions you have about trading, whether it's trading basics and you're completely new and just wondering what a chart is or whatever. Any questions you have about chart reading, price action, systematic trading, a specific market you have in mind. Doesn't matter if it's a forex or futures market or if it's a specific ETF. Or do you have any questions about money and risk management, entries, exits, trade management, whatever it is. If it's remotely related to trading, you can send it in and I'm gonna answer it in the next episode. There are different ways how you can do that. The first one is, of course, you can send me an email to marco@tradingeducators.com, put in topic Q&A there. You can post a comment right below here on YouTube. And another way you can do this is you can post on our forum at tradingeducators.com and post your question right there. So I'm going to start this with some questions I got via email this week. And the first one is, hey Marco, what's a bid-ask spread? And bid-ask spread is something you have in every market out there. It's simply the price difference between where you can sell and you can buy an asset, whatever it is. So in this case, we are looking at the Euro-US dollar forex market, but this could be anything. This could be a stock, an ETF, a future contract, an option. Whatever you buy or sell in the markets, you're going to have a bid and an ask side. Meaning you can sell at the bid and you can buy at the ask. And the difference between these two is called the bid-ask spread. So in this example here, what we're looking at is the Euro-US dollar. And what we can see here is, okay, there's the bid price is at 12.78.9. And the last one is called the pipette in Forex. So one pip would be 0.0001 in Euro-US dollar, and the pipette is the very last one. So if we look at the bid-ask price here, you could sell at 78.9 and you could buy at 79.2. And right next to it, you're going to see the quantity you can deal at that price at the moment. So here it would be about 50 units at that broker. That's would be around 5 million. And on the other side, you got 60, so you could sell 6 million units of Euro-US dollar at that price. That's what's on offer right now. Now in the order book, you can also see what's available at lower prices. So for example, if this isn't enough to fill your order, the next one you would get would be at 79.3 and there's 7 million here. Or you could sell at 788 and you would have 5 million on this side. So let's go through the math quickly. If you have the bid price of 112.78.9 and the ask at 79.2, the difference between the two would be 0.00003. So this is about 1/3 of one pip. And that would be the bid-ask spread at that moment. Now this can change any second, any millisecond. So the spread could widen up or become narrower depending on the liquidity that's going on. Another question I got was, how important is discipline in trading and how do I become a disciplined trader? And the answer to this actually is very simple. It is very important to be disciplined in trading, and if you are not, you will have no chance to succeed in this business. If you can't trade in a disciplined way, if you do things you shouldn't do, like if you place a trade that's not part of your trading plan, you do it out of intuition and that intuition isn't part of your trading plan, or you're buying more than you should according to your plan, or you're getting out of a trade too early, or you're not getting out of a losing trade right away when you should, then there's zero chance you're going to succeed in trading. It's not going to happen. You really need to be 100% disciplined. Now, just being a disciplined trader, of course, doesn't make you a winning trader automatically. It's simply one of the basics, one of the foundations that need to be there if you want to succeed. But just being disciplined isn't an edge. So unless you have an edge in the market, you won't make money, whether you're disciplined or not. But even if you have an edge, you will not win in the markets if you're not disciplined enough to actually execute that edge. How do you become a disciplined trader? And to be honest, the thing that worked for me was simply to be one. it's like you decide you're now a disciplined trader and you just do it. And I haven't figured out a better or easier way than that. The way to do it is to just start right now and be a disciplined trader. And the matter of fact is, when you start doing this, you build up on that skill very quickly. So in other words, when you manage to be disciplined for 1 week of trading and you don't do anything you shouldn't do, you're going to build up that skill of discipline very quickly. And the longer you do it, the longer you are disciplined, the more likely it is you're going to stay disciplined. So you'll learn this really by doing. Now you can apply some tricks to that, of course, especially in the beginning. This can be useful. And it can be things like having someone watch over your shoulder while you're trading. It can be things like little tricks where you say, okay, I know I can't be disciplined if I watch my charts all the time, so I'm going to turn off the charts if I don't need them. I still do that just because it's annoying. I don't like to look at the charts the whole day. So basically what I do is I turn them off if I don't need them. I don't have the real-time prices running here all day long, simply because it's first of all very boring, and second, there's no point in doing it. It's not like you magically gonna improve your trades by watching them. And another trick, of course, is to automate your trading whenever possible. So have your stop loss being put in automatically where you want it to be put in instead of doing it manually. Or if you use a trading stop, for example, automate that part so you don't have to do it. Because whenever you can automate something, if you do it correctly, you're relieved from that part of trading regarding the discipline and everything else. The only thing you then have to do is to not intervene, to not screw it up yourself. But you're freed up from doing it on your own all the time. Alright, that's it already for today. Basically, I just wanted to start off with something. And again, if you have any questions on your mind, don't be shy, don't be afraid. Even if you think it's a stupid question, there are no stupid questions. Simply send them in. And in the next couple of episodes, I'm going to try to answer as much of them as possible. Depending on how much I get sent in, I'm going to do this on a weekly or 2 times a month basis. Also, if you didn't check out our website yet, go to tradingeducators.com. You're going to find a trading blog there where I post regularly, our trading forum where you can ask questions and discuss things. You can get free ebooks, articles, and of course sign up for our ChartScan newsletter that you're going to get on a weekly basis with any news, what's going on our site, new articles, new educational material, and so on. So thanks for watching and see you next time.